Now, in as much as trend lines are one of the most effective ways in which you can trade the market, the banks also usually tend to manipulate price and sometimes move them under the trend line zones, which will cause price to move up after grabbing liquidity below the zone. So in this video, I'm going to be sharing with you volatility 100 strategy on how you can trade trend lines properly, right? So we are going to be looking at the secret trend line entries for indices, okay, and other markets, volatility 75 boom and crash, how you can choose this strategy, identify good trending market situation. They are not all situations that are good for trading using trend lines, how to draw them correctly, avoiding mistakes that most traders do, how the banks usually manipulate trend lines, and then how we can enter trend line strategy based on pending orders on market executions and how to avoid these errors. So you want to watch this video to the end if trading trend lines are one of the ways in which you usually trade. All right. Okay, traders, welcome to my channel. I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out. To begin, I realized many people still continue making mistakes regarding drawing trend lines and trading trend lines, and people have different philosophies and arguments on how to draw trend lines. So basically, guys, I'm going to be sharing with you how I do it. Right now, if you look at this market, this is a very good market structure to trade trend lines, which is a trending market. Right now, if you look at it, why does it make it a good market structure? Is because the market is gently sloping. Right, if you look at this market structure, you see it's very gently sloping. It is sloping, moving by the side, as you can see. Right, there are some market conditions where you find that they are sloping like this. Right, they go like that. Those are not very good for trend lines. Right, anyways, let's start now. To draw trend lines, it's very simple, guys. If you look at a gentle market like this, what do? If you just glance at your chart, you are going to simply see that from here to draw up, you simply connect this support. All right, you connect your trend line from the lows of this candle upward, because as price hit once, twice, and thrice, it automatically becomes a diagonal support, which will give you many trading opportunities. Right, so what you simply do in this situation is you connect from the wicks of the candle. Right, you connect from this wick, you make sure you get the touch on the second candle, and from the third candle you start taking your trade opportunities. You buy until the trade you finally find out that the breakout is true. Now let me show you guys. Now what you simply do, you just pick your trend line tool. It's very simple, guys. You just connect. Right, you connect from this low. Just look at where my cursor is. Right, I take it from the low, which is the wick of this candle. They usually call this trough, the troughs of the candle. So you connect from this to this. Right, so once you connect like that, automatically you see that price has already hit like once, twice. Now as price comes back the third time, it automatically becomes a point of entry. Right, now other people will say they are going to connect maybe through like that, maybe through the candlestick, the open of the candlestick, not the wicks. Right, and then they'll enter like that. So it's based on their philosophy, but my philosophy is connecting like this. Right, now this kind of entry is based when you want to take your trades based on pending orders. Remember, I said I was going to show you how to draw them properly and to take your trades based on pending orders. Now once you connect first and second, what do? You expect price now to come back. As price start coming back from the third zone, that is where you are going to be taking your trades. But in this time around, we are going to use pending orders. Now pending orders are simply market executions where we usually enter in advance. Let's say you just instruct your broker by placing a particular type of market order, telling your broker that as price gets to this zone, execute a buy or a sell. All right, now we have other types of pending orders, but we are going to be talking more of what buy limit order. A buy limit order, if you look in your MetaTrader 5 or MetaTrader 4 app, you are going to see, apart from market execution, which is a direct execution of a buy or sell, you are going to see a buy limit order. In a buy limit order, you simply look at this price. Let's say you want to enter here, let's say 12226, right, at this price. What you simply do is you go to your broker, you just click on where you have that drop down market execution. You are going to see buy limit. So when you see buy limit, you click on buy limit, you enter this price 1227, and then you place your stop loss somewhere down. You just enter where they provide stop loss. You enter maybe here, you just enter 1217, and then you enter where you have your take profit up there 1277. You place, you just click on place. Once you place, you are not yet in the trade. What you are doing, they are going to execute when price comes and hit the trade. All right, once it price comes and hit that buy zone, is going to execute a buy order automatically and move. If it moves to your target, it hits your target. If it moves to your stop loss, it hits your stop loss. So that is what we are going to be doing in this strategy. So once you have connected like that, what you do is you are expecting that price, as price comes back the third time, you have already placing what your limit order at the trend line the third time. So as soon as it comes and hit, let it just get executed immediately. Right, this is the zone here. Right, as soon as this candlestick hit, now we already got executed because we already entered our pending order. What happened? Look at that, guys. It means that you had a winning trade already just by placing a pending order. The next thing you have to do is you place another pending order here, right, at the trend line. So as price moves and you see that you already exited the trade, price start coming back, what happened? You also just estimate where the trend line is. Right, as price hits closer, you should just place another pending order. Right, this pending order is just to execute so that you can be able to enter at the best price possible. Right, so you enter at the best price possible and then you'll be able to catch those moves there. That is simply how you can trade with pending orders. Now you just wait for price. Now as price gets closer, you place your pending order. Right, in situations like this, it does not get executed. All right, you just extend it. You just extend your trend line. You keep extending it, okay, until you get all of your touches. Now if you see here, you got executed here and then price move up and hit your target, and that is how you can place a trending order. And then I've showed you guys how to draw the trend line properly, because if you drew the trend line properly like that, guys, you already see that now you have one, let me say 1 2 3 trades. Okay, number 4 trade, let's say you place a pending order here, you got hit, you came down and stopped you out, that's no problem. Now this is where the smart money concept comes in. Now if you look at it very well, you see that price moved down here. It was only to grab liquidity, close the traders that have taken trades below this zone, because normally we call this liquidity grab. Why is it called a liquidity grab scenario? Because after this candlestick closed below this zone where most stop losses have been placed, the next candlestick was a very strong bullish momentum candle. Now to benefit from this strategy, what you simply do, you buy as soon as you see price close with this strong momentum candle. If that was a valid breakout, we would have seen maybe price just go down continuously, right? And then as price dropped, we would have seen next momentum candle, maybe price drops now before comes back to mitigate, or maybe come back to retest and continue the downtrend. But this was not a confirmed breakout because it was just one single candle that was formed below. The next candle was a bullish candle. This is called liquidity grab, where the banks will move to stop. So what happened in this situation? You enter with a direct order this time. Since you entered with a limit order, or let me say we buy limit orders, these were all buy limit orders, guys, and as price goes back up, now you enter with market execution, your stop loss below, you are targeting these higher zones up there, right? And you're simply just going to place your buy like that. In this situation, when price close back below the above the zone, your stop loss should just be a little bit above those zones there, and then you target. All right, that's it. You got the trade. And what happened? This trend line remains valid. Okay, it remains valid because there was this breakout. This was not a valid breakout. So in this situation, you don't neglect the trend line because it was a liquidity grab scenario, right? So you just extend it, and what happened? You continue taking your trades. You see now that price comes again and hit this zone, guys, and what happened now? If you had entered with a limit order, you would have still gotten the move and you have entered. If you had waited for this candlestick to close, this is a candlestick that shows rejection to the upside, indicating a buy, right? Right, so with this rejection candlestick, you can still enter with a buy trade, guys, and then you target the zones above there. Right, you see now that price move and then still hit the target, and then that is how you are able to cash a lot of entries. So you just extend the trend line further. All right, this time around price comes hit, and then we entered our stop loss below there, and what happened? Price move and came back and then stop us out, and that is how the trend changed. But if you look at it very well, guys, how many wins do we have just by understanding this simple concept? We have to win 1 2 3 4 trades, 5 trades, 6 trades. All right, just losing 2, about 2, which was this liquidity grab scenario. And this, guys, imagine the risk to reward ratio that are using. Imagining that as each trade we take, let's just say we are taking a trade like this, and then we just target the previous high, because this is knowing where to exit is also important in this. So if you enter in this situation, your first target should be this zone here, right? Let's say you just entered based on that. You just say that's how you target your stop loss below this candlestick. Guys, look at that. How many risk to reward ratio? Look at that. What risk to reward ratio are you going to get there? Like 1:5. All right, imagine getting 1:5, 1:3, 1:4, and then you just come and lose one single trade. I mean, how is that going to affect you? In the long run, you are still going to be profitable. So that is one of the most important things, knowing how to use risk management, knowing how to, use good risk to reward ratios. And guys, please always remember to use good risk management in every trade you take, because anything can happen. Either the banks could manipulate, maybe could be forced out and all of that, and you see end up losing losing a big portion of your account if you don't manage your trades properly. All right, so basically that's what I have for you guys. You can use this strategy in any market, like I said earlier, and like you guys have been writing me, if you can use it in volatility, in forex. I've showed you guys that you have made videos on different examples, so that you should see how valid the strategy is. So thank you for watching, guys. Avoid the errors of skipping weeks, avoid the errors of drawing and then you don't get touches, and also make sure that when you are drawing, ensure that the market is gently sloping. Like I said earlier, it should not be too too steep, because that will easily get broken. So thank you for watching. Make sure you like the video by hitting on the like button. Make sure you click on the subscribe button if you are new, so that anytime we post a new video, you are going to get notified. You can join our Telegram channel. We have the link in this video's description below. See you in the next video.